All right, we are live. Let's get into it. All right, technicals, fundamentals, macro, let's go. This is what we got so far. S&P 500 is now above a resistance zone. We're starting to gap up. Today the topic is, what is stagflation? Are we really looking at stagflation, which is literally the worst economic scenario for, conditions for the market and for the economy? But why is the market gapping up if stagflation is such a big threat right now? Why are we gapping up? Why are we above anchored VWAP? Why are we holding that 50-day moving average? We're going to get into this. But the market's pretty strong. I would say we need to wait till we get to the end of May. I think the dip continues. We're probably going to retest the zone, come back down. We'll see what happens. But Nvidia earnings are at the end of May. We'll know by June if stagflation is an actual threat or not. As far as I see, I think it's a wait and see. I think it's a wait and see. We are seeing some stagflationary alerts, but we need more time to figure out what that is. So S&P is now above previous resistance, broke the downtrend, looking strong. It's looking pretty strong. But let's go through why the stagflation stuff. Is it real? Is it legitimate? If you want to see the charts, TikTok, go ahead and jump over to the YouTube. Link is in the bio. The charts will be the macro charts and the fundamental charts will show up on the YouTube channel. Go check that out if you want to see. All right, so let's go with first. Let's start with okay, well, actually, yeah, let's start with the employment report. Okay, you guys here on YouTube, the employment report, right? Today we had a big miss in employment, and we did talk about this. If we saw a significant miss in the employment report, we'd probably see rates come down, okay, and we'd see stocks actually go higher, and that's what we got. We got stocks going up because really stocks, equities, risk assets are moving off of where rates are. Where are rates going to be? That's what they're looking forward to. Where interest rates going to be, because that's how you value the equity stock market going forward into the future. And so employment came out weaker than expected. Unemployment came out high, 3.9. We're edging towards that 4%. Rates came down, markets went up, right? And this was a pretty big miss. Expectation was 240,000 jobs added. We had 175,000, right? So a big miss on the jobs, but that was good for markets. That's what they want to see, because the concern is inflation is pushed higher with higher growth, right? Growth and inflation run together, they're corresponding. And if you get weaker than expected employment, then you're going to expect spending to slow down, etc. Inflation comes down. Also, the Fed has two mandates, and people seem to forget this. They have a mandate of prices, keeping prices stable, right? Which we're at 3.5%. When it comes to inflation, now your prices are up a lot for the economy, but they also have an employment mandate. If they start hiking, or if they do not cut, there goes jobs. And guess what? It's a much worse situation for the economy when employment falls. You have no growth, right? That's even worse. So right now we're kind of sticky inflation. Point being here, employment fell, and we always look at, the bond rates. We go to the bond rates, 10-year yields. They came down significantly. They fell. They were at 4.7. We dropped all the way to what? 4.46. We'll go over that a little later. But this is kind of what pushed up the market. Weaker than expected employment. But we need more context to this. Also, the dollar came down. And I think the dollar is in a secular downtrend. Not secular, I'm sorry. For this cycle, right? Which is maybe 3 months. I think the dollar comes down for the next 3 months, and then we'll see if inflation ticks up again or where it remains. Either way, that's why the market's up. Employment was weak and the dollar came down, rates came down, weaker economy going forward, right? So back to SPY, so we can, and we're supporting that 50-day moving average also. And we just broke above that resistance. All right. So back to the issue here. So what is actual stagflation? Well, look, so far we have, and this is kind of fundamentals. We have Starbucks, KFC, McDonald's, all reporting a weaker consumer. So do I have the slide up here? No, I'll just show it on here. So basically you have a weaker consumer coming in, right? At the lower end, at least. They're starting to pull back. So Starbucks, KFC, McDonald's, Pizza Hut, blah blah blah. So you're seeing a weaker consumer. So now we're getting the weaker growth, which we expected. We said April, May, we should see weaker growth. That should bring down growth expectations into June and also inflation expectations into June. We'll see how that plays out. But you have Wingstop and Chipotle. Still, that's where people are just shifting their money to Wingstop and Chipotle. Okay, not all together, but this consumer, this demographic of consumer is just spending elsewhere. And we'll see how that, we'll see how that continues. But for the most part, yeah, back to those charts. For the most part, is stagflation really here? It is literally the worst case scenario. Let's take a look at the macro. So here's inflation, right? They tell you if you're going to get real stagflation, you're going to see inflation here, CPI. Let's just call it CPI because everybody thinks inflation is just prices going higher. It is the rate of prices going higher. And so far, the rate of prices have came down. The rate of price acceleration has came down. If your wages are up, that's part of inflation, and you're going to actually benefit from that. If your house price is up, right? If the equity in your house went up, that's inflation also. So it's not terrible. It's only bad when it's extreme, when it moves quickly and moves fast into the good sector. But overall, if inflation goes up, so does your house prices, so do your wages. So you don't want zero inflation. You just want steady inflation in these certain areas. And right now it's sticky above, a high level. But growth, on the other hand, this is Fed GDP now. This is how you gauge economic growth in real time on a weekly basis. It's not falling. So stagflation would be, inflation, CPI accelerating to the upside and GDP now coming down. That's not the case. As a matter of fact, Powell did say, hey, I'm not seeing the stag. The stag would be, growth falling and we're at 3.3% right now. We're probably going to be at 2 by the end of the quarter. We'll see. But this is 0% growth. That would be stagflation, zero growth, or maybe like 1%, which is below trend. So if we get growth down here and inflation picking up, that's real stagflation. We've only had 1 month where GDP is kind of stagnant, or the ISMs are kind of stagnant, and CPI is not even really moving higher. If we break out right above this level, which is I think 3.7, 3.6, then we're going to be looking at a reacceleration. It does kind of look like we're bumping higher a little bit. I think we're stuck here. I think we're stuck. Maybe we do go to 3.6, but we'll let time take over. Powell is very dovish, and I wonder why. Why is he dovish? Because I think we have some actual issues in the economy. We have some commercial real estate problems coming up also. So, anyways, is it real stagflation? No, not really, because GDP is still at 3% and CPI is at 3.5. So they're pretty much one for one. You're just getting nothing, right? You're getting nothing. It's sideways. It's pretty neutral. No acceleration in growth, no acceleration in inflation. That's a false narrative, right? But we do see, okay, and we're going to go to the ISM, the forward-looking things. We do see stagflation in the ISM. This is what I'm concerned about, right? Here's the chart. TikTok, you're not going to be able to see it unless you go to YouTube. But demand, okay, is in black. This is supply chain demand for the manufacturing economy, for the service economy. All right, you guys on TikTok, you're not going to be able to see this. Jump over to the YouTube if you want to see the chart. If not, then I'm sorry. But that's where we have the charts. I'm not going to throw on 50 charts. If I had better streaming, if they allowed me to do that, I would. Either way, stagflation is showing up in the supply chains. Manufacturing demand has fallen for 1 month in a row. Wow, big deal. 1 month it fell, prices are up. This is not great in the near term. Okay, prices up in the supply chain for manufacturing and demand down. Okay, let's go to services. Prices up, demand down. But this is definitely stagflationary signals, but it's 1 month. It's 1 month, right? You need 2 or 3 months to really call it. It's only 1 month. This could reverse next month, and I think we do get the reversal because consumers are starting to pull back a little bit. Oil prices are another big input. Oil is tame. We'll throw on the charts here. Look, oil is tame. Okay, oil is tame. Let's take that back. Let's go to oil. Let's take a look at it. Oil's the big input to inflation. Came down significantly. Oil's already down from the highs. Okay, a good 10%. That's a big move, right? From 87 to 78. So gasoline prices coming down eases the consumer to some degree, puts downwards pressure on the energy part of inflation, plastics, XYZ. So I think we're just looking at stagnant growth, right? Not literally zero, but like 3% growth, 2% growth. And we're looking at 3% inflation. And we need time for things to actually work themselves out to see what's actually happening. So That's what's going on right now, right? That's why the market's up, because the market isn't really buying into the stagflation, or else we wouldn't be moving higher. The S&P is not going to go up. The market is not going to go up off stagflation. So what it's seeing here is, okay, 1 month, great. But the other factor here is earnings. Okay. And this is what something I've been trying to, throw out there, that markets are not just about macro. They're not just about fundamentals, but it's a mix of fundamentals, macro, and money flow, right? In the actual economic policies. We'll go over the economic policies, but right now the fundamentals part, the profit margins part, is rising. So net profit margins, this is what's going to get stocks up, regardless of whatever's going on in the economy. The stock market or companies or corporations, they can adapt, and we're seeing that adaptation happening right now. They're strengthening themselves. The strong survive. So net profit margins are up to 11.5%, and this is higher than the pre-pandemic highs for profit margins. Okay, that's a good bid. That's going to get you higher. Why? And then when we look at technology, that's a big part of the S&P 500. Okay, switching over, look what we're seeing with Alphabet. Okay, well, Alphabet are Google, Meta, Apple. Ridiculous, creating more scarcity for their stocks. Okay, and more earnings potential for the stock. So basically, Google issues its first dividend ever. Okay, first dividend. So they're paying back their shareholders for staying in the stock. Okay, and they do a $70 billion buyback. They're basically removing $70 billion of stock from the market. When you reduce supply, price goes higher, right? Not automatically today, but they're removing the amount. They're making it more scarce. Alphabet's creating scarcity, and then they're adding a reason to hold the stock. Here's a dividend, and let's make the stock or the asset more scarce. Meta, same thing, starting to pay its first dividend. I don't even know if that's authorized yet, but that's what they're talking about. And they did a $50 billion buyback, also removing shares, creating scarcity, and then increasing a reason or demand to own the stock. Apple, biggest stock buyback in history, in all history, $110 billion stock buyback. That's bigger than most banks, right? So they're removing a whole lot of shares. They already have a dividend, and this is strength. This is giving more confidence to own equities versus everything else. What else are you going to own? What else are you going to own? Right? Amazon AWS had the best. This is all the way in the right hand corner at the bottom. Amazon AWS, highest profit margins ever. 63% profit margins for AWS. Right? So Amazon's now starting to ramp up. They're getting stronger. Now, if we look at the overall market EPS, the expectation is that EPS goes higher, right? We're looking at EPS here, S&P EPS. That EPS, or earnings per share, we're in Q1. We're looking at Q1. Well, Q2, Q3, Q4, all higher. So going forward into 2025, this year should be a rally. This year should continue to march higher. On top of the election, on top of the election cycle, and everything else, right? So a lot of strength there. Almost done. We're almost done here. Commercial real estate. This is the real predator here. Okay. What's going to happen? So we have $929 billion of commercial real estate due or maturing this. I believe in 20. Some people say 2025 early. Some say 2024. It's spread over the next 12 to 18 months. Okay. So this is an issue. This is going to be in a lot of bank balance sheets. But the real question is, how does this affect the market? Is the market concerned about this? It is mostly commercial real estate. Well, if we dive a little deeper, okay, yes, this is going to be a problem, but this gives the Fed reason to cut rates. Not only are the net interest payments for the U.S. government way too high and this cannot be sustainable. They cannot afford these interest payments. So how long does it come? Powell already said that he's going to be shaving off the balance sheet. This is huge, right? He's going to be, or the Fed is going to be reducing the balance sheet here. And the best way to think about it is they've been removing about 60 billion, well, $90 billion. They've been removed. I think they're down to 60 billion. They're removing money from the financial system, 60 billion a month. They're taking that down to 25 million. This is called the tapering of QT. They're tapering QT. They're starting to reverse and head into QE. This is why markets are really up. This is why the S&P really pumped during the Fed meeting, because the market now knows that Powell is is going to start injecting liquidity, right? A net increase in liquidity inside of financial markets. You have to. There is no choice because the commercial real estate, you have to print money. There's no choice, and markets are going to go higher. You think it's negative, but if we go back to 2023, I don't think people realize this. 2023 was a bigger banking crisis than 2008. It was a bigger banking, $553 billion of pure failure, right? But nothing. Nobody blinked an eye. Bitcoin went higher. Markets actually bounced on that because the Fed is here to rescue you. Not everybody, right? You got to be in the right stock, but the Fed will not let things collapse. Neither will the U.S. Treasury. So either way, commercial real estate, they're going to cut rates and they're going to continue QE. They're going to cover up the holes how they did before. On top of that, we have Janet Yellen, right? Well, I don't want to say just Janet Yellen, but the U.S. Treasury is now starting something they haven't done. I think they did this in 2002. It is a Treasury buyback program, just like stocks buy back their own stocks, right? Just like a company would buy back their own stock. The US Treasury issues debt, pushing up rates, and now they're going to be buying back their own debt. Okay. They're essentially removing treasuries from the system, which means they're putting downward pressure on rates because nobody wants higher rates. So this is QE. This is another form of QE. So the Fed is starting up QE, and now the Treasury is starting up QE. That's a net, inflow of markets. The real issue here is when is inflation going to roll over, right? When is it really going to roll over? Now there's some data out there that shows auto insurance margins have improved significantly to the extent that prices will no longer go up. I have no clue if this is true. I don't know how this works, but what Allstate showed is some research from Allstate that profitability is at such a high margin that they are now likely to reduce. So they don't want to lose demand, right? I switched my auto insurance and I got a way lower rate. I'm using Lemonade Insurance. I don't drive much, so my bill is nothing, right? It went from like 190, it was climbing all the way down to 100, and that was after taking a long trip. It's probably going to be like $60. So now that the competition's coming in, they're going to have to adjust a lot of these auto insurance premiums, right? They're going to push them down or they're going to lose business. So that's that's forward. That's pretty positive forward looking. And shelter costs also, there's a huge lag in shelter. We've talked about this. Shelter is going to take a while to come down, but that's why S&P is going higher. That's why we're gapping above. We're having a big gap and we're getting above that resistance level. This is anchored VWAP from the initial sell off because liquidity is due to come in second half of the year, right? Forward looking inflation, shelter is due to roll over. And inflation looks actually better. Now, yes, the supply chains don't look great this month, and we'll see next if that continues. Employment is down. Okay. So the Fed's mandate is to maintain employment, which means today's employment report puts us closer to actually a rate cut. Those rate cuts are now pushed out all the way till September. They were in June. We talked about this about a month ago, last month. Now they got pushed all the way to September, but that's okay as long as growth continues to hold above trend, above 1.5%. And I don't know if that's going to continue, but we watch, the market to see if that is true. So this is why markets are down. Hope everyone's doing well. You got any questions, comments, let me know. We'll go over some individual stocks, but this is why the S&P is up right now. Liquidity coming in second half of the year, very strong. It's an election year. Come on. You really think the fiscal authorities are not going to continue? Joe Biden will print money. He'll continue to pump money if he sees more slowing in the economy to win more votes, period. It's as simple as that. QE from the Treasury, QE from the Fed, and QE from the president. So more liquidity is coming. It really comes down to, is inflation going to stay where it's at or drop from there? Okay. That is what we're looking at. Your credentials, how long you've been trading. I've been trading since 2019, 2020. Trying, always experimenting with different stuff. Credentials, I got my degree in, I didn't get my degree in finance. I did not get a degree in finance. I'm all self-taught, self-learned, self-taught, and been successful enough to be doing this for a while. And yeah, that's what I do. So yeah, I mean, do your own research. I'm just giving you the data here. If you are on TikTok and you missed the charts, I'm just giving the evidence, right? Nobody can tell the future, but you want to use the evidence, the charts to predict or to at least have a better probability of what's going on and what we see going forward. So that is the macro for now. Easy way to see what's going on here. Look, oil prices are falling. Okay. If oil continues to fall into this, peak demand, you're not going to get price pressures. You're not going to get expectations for inflation rising. As a matter of fact, this is expectations falling. Okay, that's expectations falling for inflation. Markets want to see that. The dollar is reacting by coming down lower because the risks are falling, right? The risk of inflation is coming down. And then it's getting its signal from rates. Rates did ease. Now rates can keep climbing here, so we'll keep we'll keep an eye on GDP, but rates are still our rates initially at least are falling. What is the daily chart? So we've had rates come down for 3 days. They've been down for a week. They peaked last week, so now they're coming down, and that's a huge factor for the market. Isan, what up, Isan? TQQ, I pointed out, MACD is turning red weekly. We dropped from 63 to 49. TQQQ, let's see what it looks like. Yeah, I mean, it is gapping. We'll see if it can complete this move. It is starting to move above that resistance, though, right on TQQQ. So we are above that resistance, Asan. And I think the Qs look good because, again, Apple is, let's look at Apple. Apple is had that huge gap up on Apple. I mean, that's a pretty big move simply because they are financially engineering the stock, right? They're creating more earnings per share they're creating incentive for the shareholders. And I think Apple's turning into a legacy stock. It's turning not a legacy stock, I'm sorry. It's turning into a value stock. It's kind of, it's not really a growth stock anymore, but now it is a cash cow. They generate so much cash. What do? They buy back stock. They increase their earnings per share. They make it more scarce. So they just have a lot of cash. So Apple, again, is in this, it's pretty much in a big, now you're looking at Apple in a range here. And I think it's more likely if we see the overall market up, it just breaks out. So we'll see how Apple moves out of this range. And stock buybacks are pretty powerful. $110 billion of stock buyback is going to pump Apple stock. And then Google, again, I think Google, let's go to Google really quick. Google had the dividend. I mean, that's pretty good for shareholders. Dividend and gapped up, came back down, checked this. What is this? 162. Yeah, Google's at all-time high. So a lot of these names are going to continue to carry the market. And now we're looking forward to bigger earnings, not bigger earnings. I'm sorry. We're looking forward to the Fed cutting rates going forward. So stagflation, is it a worry? Sure, it is, because ISM prices, supply chain prices are up. But with commercial real estate defaulting, if we get those defaults, that means that's disinflationary, just like it was in March of 2023. Go look at the charts. When the banks failed, basically equity owners lost all their deposits. Same thing with commercial real estate. If you get defaults in commercial real estate, basically the banks, they're going to lose, right? They're going to lose their money. So whoever owns the debt and the equity, that money disappears. That's disinflationary. Then the Fed comes in and restores all the chaos, prints more money. They don't give it to the equity holders. They give it to the system to make sure the economic system continues to work, right? Or the financial system continues to work. And that's how they rescued the market in 2023. Meta, still same thing with Meta. Tesla also, now Tesla in China might get passed for, Tesla's looking at FSD or full self-driving starting up in China because they're a lot quicker and they're a lot more progressive than the US when it comes to electric vehicles. And that's why Tesla stock bounced also. So there's a lot of positives coming in here for earnings. Tesla did get rejected by that 50-day moving average, though. It's starting to accumulate now at these areas. What do you got here? Shows the same move, QQQ. Yeah, same thing. QQQ is the same thing. And I think all this really points us to is a summertime rally. We're looking at summertime rally coming up here, just like the Santa Claus rally. You guys remember the Santa Claus rally in the last, the last big rally? Well, we're setting up for a summertime rally here. That's what I think we're setting up for. Let's see, SPX. Let's go to there we go. So Q1 was up all year. Q2 so far has started off down, moving sideways. We're now above both these anchored VWAPs, 50-day moving average. And the message here is that QE is back. The message is that QE is back, and the Fed will continue to rescue as long as we don't get inflation get out of hand. The Fed will cut rates, and a commercial bank, commercial real estate collapse or default is going to lower inflation expectations. Rates are going to fall. So guess what? Most of the stock market is not real estate. This is not China. It is technology. It's mostly technology. And, yeah, you'll get job loss. So you'll get an unemployment spike if that's the case. If unemployment does spike, the Fed cuts rates, right? Fed cuts rates, market goes higher, period. Does it slow down spending? Maybe, but a lot of the spending is coming from the baby boomers, right? Who are collecting 5% cash. So whenever the switch happens, when they do cut rates, maybe not till September, the market's probably already going to be up by the time they cut rates. We'll see how that plays out. All right, so Tesla T. Let's look at Tesla. Tesla on the daily chart. Let's go ahead and turn this up. Let's go Tesla on the daily chart. We'll take a look at crypto. Crypto showing, or at least Bitcoin, at least showing a great opportunity here. Let's go to the weekly. There we go. All right. So Tesla's weekly. Okay. The RSI tells us we're starting to get that bounce in the RSI, starting to move higher, just getting started too. The RSI is barely getting started. We still have a lot of room to really make another big move here. And if the market is moving higher off liquidity and the expectation of lower rates in the end of the year or September, then you're going to get a bounce here in Tesla. They have nasty fundamentals, but remember, when it comes to Tesla, the production prices are falling. Their producer prices are falling. The prices to create batteries are falling. Now you have potential growth in China. That's going to be another narrative here. And it's going to take a while before revenues actually start to pick up and get back to a growth phase. And they may not pick up this year, but the expectation that full self-driving is what's driving the stock, and your energy storage is also driving the stock. And then, to your chip makers, let's see what the chip makers look like. We have AMD. AMD gigantic drawdown was weekly. Let's go to the daily here. I mean, AMD is showing a really good opportunity. It's starting to press, it's starting to bottom out. Okay, you're getting bullish divergence here. Very clear bullish divergence. Let me see if I could change. Can I change the color on this? Oh, never mind. It's kind of hard to see the RSI. Oh, you can't see it that good. I'll leave it like that for now. So yeah, you're getting some bullish divergence on AMD. So I think this is definitely set. And earnings already over. That's an easy win. I mean, not easy win, but that's an easy divergence here. You're getting price come down, while the RSI is starting to pick up. So pretty soon you're going to get another move for AMD here. Yeah, Nvidia's up too, but AMD is such an AMD's down a lot. They have a lot of chips that they're coming out with. So I think AMD is another great opportunity for a big swing trade. I'd look at a little longer call. You can always buy puts. Also, you can sell puts at the lows. You can sell puts, collect easy premium that way. A lot of ways to play it. AMD does look good though. And let me see, CMG. So also you have Chipotle, right? Chipotle. This just tells us there's still a lot of spending in the economy. People might be slowing down on McDonald's and who is it? McDonald's and I don't know who else it was, KFC, whatever. But Chipotle still has pretty good earnings, right? They have a lot of earnings power here, a lot of more protein. People love the Chipotle. So Chipotle strong, and then Wingstop is also pretty strong. Those are two inflation stocks for not discretionary spending. This would be staples. No, I guess you could call it discretionary. Mostly consumer spending. And then I think Domino's is up too. Domino's Pizza. So you can see that the earnings are still, profit margins are still rising for a lot of these, consumer spending stocks, they would be dumping after earnings if the outlook was bad. Celsius is still up a lot. People are still buying Celsius, right? So there's a lot of spending. Ulta, not so good. Ulta is getting crushed. Where's the money rotating? Is rotating into ELF because consumers are trading down for cheaper products, unless it's Chipotle. So you do have some of those consumer products, consumer spending products up a lot when it comes to the stock market. Who else is in play here? Oil is pulling back. It looks like ExxonMobil could not break out. Ooh, you could play a condor here, a monthly condor. I don't know if I would do it, but you could play an iron condor here because oil is pulling back significantly, right? You got oil pulling back, so it's like, I don't think so. Now, here's who's going to break out here. Robinhood's already trying to break out because they are exposed to a lot of the financial stuff. They have a lot of user adoption, probably one of the fastest adoptions when it comes to digital wallets and also crypto, right? The crypto cycle is the strongest cycle right now. And that's where I think Robinhood's going to break out. Move forward. I don't know about, you know what is Progressive? Oh, we'll see. We'll see if Progressive's giving us a signal here. Auto insurance, if they're really peaking on their margins. But yeah, Robinhood looks good. Tesla, yeah, Tesla also with the bullish divergence. I mean, it kind of played out already. I got a couple calls on this. I got a couple calls here. We'll see if this continues to play out. I think it looks good. We need to hold the 175-ish area. Yeah, we need to hold 175 for Tesla. And it looks like bonds are starting to break out here. This is another reason that this is just another factor that gets risk assets up again is bonds are breaking out. And when you get treasury buybacks, basically the treasury is going to be buying bonds. They're going to be removing them from circulation. So that's a forward-looking signal that, hey, if they're going to remove treasuries, well, that's going to cause more demand into the bond market. It doesn't look great, but you're getting strong bullish divergence. Look at this bullish divergence here, starting to move up. Okay, clear reverse head and shoulders, right? Clear reverse head and shoulders. I remember seeing this probably 3 months ago. I think it was back here. We had the same thing. It was back here. Maybe it wasn't that clean, but you had a reverse head and shoulders. And when bonds rip, interest rates come down. Simple as that. If interest rates come down, then forward-looking earning, these are interest rates, forward-looking earnings are going to be up. Okay, forward-looking earnings are going to be higher because the cost of capital is lower, so you have more earnings. And if the dollar comes down, and the dollar is going to be tough because the Japanese yen is getting destroyed at the moment. They cannot control the currency. So the dollar might be just moving higher off of other currencies weakening. Not so much it's moving higher because there's a risk, huge risk in the market, but because you have currency devaluation in Japan and China. China's going to have to also devalue the currency even further. So that pushes the dollar up, but it's not a risk off up dollar. It's a strong dollar, strong US economy. So I'm still pretty bullish here. I'm still pretty bullish. I think the dip is over. The bottom might be in, unless we get some crazy report, but I think the bottom's in. Earnings were solid. And we'll see if those ISM prices come back down. Oil's back down. So this looks like the bottom. I mean, maybe in mid-May, we'll see how NVIDIA earnings play out. The market could trade down into earnings. And we'll see how that. Yeah, would you say McDonald's is trash food? Yeah, maybe there's people actually choosing more healthier foods. Chipotle is definitely healthier than McDonald's, that's for sure. That is for sure. So yeah, dollars coming. So I think, yeah, we're looking at a summer rally here. We're looking at a summer rally. This should take 3 months for the dollar to get back down. And rates, I'm not sure how fast rates get down, but if rates do ease back into 4.3, 4.5, and here's what I'm seeing: rates are typically about 1% above CPI. So CPI is at 3.5, rates are at 4.5, right? 4.5. So if CPI comes out at, 3.3 or even 3 flat, you're looking at 4% rates. That would be a tremendous drop for rates. That would, we'd be coming down to here. So it really does come down to what are the expectations for headline CPI. They've been moving in unison. They've been moving together. So it's all about inflation as usual. Forward-looking inflation does look kind of staggy, but but if we do expect growth to be slow in the next 2 months, then I'm not so sure. Especially if oil stays down, we're good here. We should be good. Then S&P starts to gap up again. So that's the real. I don't want to say that's the real reason, but this is very constructive for the S&P, and you're getting more liquidity. I mean, that's the biggest factor. More liquidity coming into the market. Oh, Kava. Kava. Oh yeah, another food industry, right? People are spending. So Kava's moving up pretty strong. I haven't looked too deep into this, but it sounds like it's a secular trend. Is it more healthier foods or something? Like Whole Foods? GME 13 puts. Oh dang, okay. Getting puts on GME. New short squeeze on GME? No, not unless they cut rates. Was this earnings? No. Oh, it does look like a little bit of a short squeeze on GME. Okay. Yeah, that was a pretty big move. It probably was. I don't know what the short interest is, but that's a pretty big move. Now, is it really gonna move higher? I don't think so. That was pretty much your move right there. It shouldn't trend any higher. It looks like it. It looks great. Um, it looks great, but I think you do need lower rates for GME to pick up. Looks like trash. Still below that 50-day moving average. I wouldn't be too excited about it. Um, let's see. EVs all falling, gig economy. I haven't looked at Twitter stock for a while. Is Twitter stock recovering? Doesn't look bad. Airbnb, Open Door, looks like trash. I think DoorDash got smashed also. Well, copper, I do know copper is going to be up because what we did learn from the earnings reports is there. Oh, you said squeeze on Neo also? Squeeze on Neo? Shoot, it better squeeze. This thing's been getting crushed. We'll see if it gets up there. But for the most part, you're seeing there's so much data spend for AI, from Apple, Amazon, Google, Facebook, Meta, and then all these other, mega cap companies. They're spending so much on data centers that, we're getting a big move in copper, a secular move in copper. The cycle for copper is moving up. And it does sound like it's going to be inflationary, but I mean, copper's already looks like it's headed to all-time highs. Is it inflationary? Maybe. We'll see, but they're going to start producing more copper. Um, so it might just get stuck here, come back down. Maybe it does break out. The real question is, well, is lumber going up? No, it's not. Lumber prices are not up. Well, what about nat gas? No, they're still getting crushed. So constructive. What about wheat prices? Not still low. So it's not really inflationary. Just because you have one commodity moving up is not enough. Definitely not enough. And I'd keep an eye here on these regional banks, KRE, because now that these concerns about real estate refine, you'll see if KRE is holding up, the banking system is resolving this issue with commercial real estate. If it starts to dump, I'd be worried that it'd be a little more worrisome because trust me, the equity holders know a lot more than stock traders. The people who are, holding the debt, they know they're calling every single day. How are you guys going to restructure this commercial real estate? How are you going to refi it, XYZ? Thoughts on Apple? We talked a little bit about Apple. I mean, Apple is, buyback $110 billion buybacks. They just removed a huge supply of stock. I mean, 100 billion, that's huge. So Apple is creating more wealth for the shareholders, period. That's what they're doing. They're giving back to the shareholders. Um, at this point, if Apple can hold this gap up, it might be a good play. If it does come back and kind of retest this resistance. somewhere around 175. If it can come back and hold 175 at any point, I think that's it. I think that's the bottom. You have, higher low there. There's your low, and then you'd have another higher low, and then, you're probably running back to all-time highs. If you get above that, well, Apple's gonna run. And then we'll see if China starts to recover. I'm not sure though. You said Twitter is private. Is it? Oh, semiconductors, SMH. Yeah, I think semis continue to break out. I mean, there's just so much spend on, data centers and chips. There's still a lot more spending to come also. So yeah, I'm with it. I mean, we'll go to semiconductors real quick, see what they're looking like. Um, where's the semis at? Chips. Here we go. So Nvidia looks like it wants to break out. Let's go down to the daily chart. Let's keep it here. Let's actually throw on. Dang, it's way above the 50-day moving average. Yeah, Nvidia's up there. Okay, so Nvidia looks like it's going to break out SMCI. It did have that breakdown, but it looks like it's starting to reset. Yeah, Elon Musk did buy it. I don't know if Twitter's. I don't think Twitter's private though. Yeah, I don't think Twitter is private. I haven't heard about the stock. Maybe I'm wrong. I don't actually know. I really don't know. But okay, so SMCI. Hey, that's a pretty good. You know what? Let's look at the trends here. This price action does look pretty good. Not for SMCI, for Nvidia. Although it's holding the 50 days. So you got SMCI holding the 50 days. It's getting tight in between, 925, 700. I don't really like SMCI, but I mean, if you can hold for a while, you can make that bet. It's looking pretty strong. A lot of wicks there too. A lot of wicks coming in. You got some real buyers down there for SMCI. Qualcomm making new highs. Yep. Well, I guess they're not new highs. It's going to all-time highs. So Qualcomm starting to pick up. Did they finish earning? And the fact that most of these chip names are already done with earnings and they're moving up, that's a very positive sign. Earnings are already over with, right? Intel right back down to 2023 lows. I don't know what's up with Intel. No clue. Never been a fan. AMD, I like this setup the most for AMD. We got down to 141. You got the retest. It should be gone. AMD should be gone. Earnings already over. I think it takes off. That's probably my favorite semi right there. Who is this? Broadcom. Pretty big consolidation right off the 50-day. Yeah, semiconductors look great. Semiconductors look great. Broadcom looks like it's holding. TSM starting to break. Looks like it wants to break out early. Probably has another pullback. Try to see if it can hold. ARM. Not too sure about ARM. Micron. Marvel on semiconductor now. They look okay. They look okay, but still, I'm gonna harp on it. I still think your best play here is not anybody, obviously, if you're not exposed to it, but just watch out for Bitcoin. I mean, this is what Bitcoin does. It breaks down, okay? Breaks down, and then you have the ETS, but it breaks down and then it goes higher. And we just finished with the halving event 2 months in. So what, by the end of May, by June, we should be getting a breakout in June, and it is sniffing higher liquidity. Crypto is sniffing out higher liquidity. You have Ethereum, same thing. It's just in a very sharp, beautiful downwards flag, right? Bull flag. I mean, that's a bull flag. If you ever seen one, this is a bull flag. So Ethereum's going to break out. Don't get intimidated by the price. Ethereum looks really good. I'm still watching. I mean, Solana looks good. Chainlink. This is what I'm most interested in. They're still they have a lot of revenue. The revenue is exploding, by the way, April. So their revenue is only picking up for CCIP, connecting all blockchains, private and public. So I'm still the most bullish on Chainlink than any other blockchain. It's not a blockchain, but any other crypto. It's a technology. XRP still doing nothing. I don't expect XRP to ever do anything. The graph, Aave finding some support, lending and borrowing. Now, Aave is actually being connected to all blockchains now, so it'll have a global bridge. They're using CCIP technology to basically bridge to any other blockchain. So, I mean, crypto is still the best bet here. I'm telling you, it's going to outrun the semiconductors. Um, when the cycles starts to come up again, crypto summer, June. I think we're having a summer rally here. Summer rally is what we're looking at. Cardano, not a fan. What is? I don't even remember. What is it? ADA? No, I think. I'll be honest with you. I think Cardano is trash. Cardano lost its use case a long time ago. I don't mean to hurt your feelings. Don't get your feelings hurt. That's my opinion. Cardano's trash. I used to own it last year, but talking to some computer engineers and of course, everyone's gonna pump their thesis, but Cardano just doesn't have enough usage. You're competing against Solana and you're competing against Polkadot and you're competing against Ethereum. I just don't think so. Nope. What's up, Tigger Media? So yeah, crypto looks like it's poised to break out, and typically the Bitcoin dominance comes down. You get alts starting to lead. So I think we get alts in maybe in the next 3 weeks. We'll see. We'll see how things play out. I'm not sure, but that's what it's looking like. Yeah, oil's down, rates are coming down, dollars coming down, profit margins are up. You probably sort of missed it if you're just jumping on here, but um let's see. FOMC. Oh, that's a good question. Glorious Trades. Thoughts on FOMC? All right, so FOMC. Well, let's take a look at this. The bond market, if you're not familiar, the bond market is what really tightens the market, not the Fed, not Fed funds rates. Um Fed funds are one way to look at interest rates, but those are for banks. Those are for 24-hour bank to bank lending. And so I'm going to put on the rates real quick. So after the FOMC, now rates are falling. Why? That's a dovish reaction, right? As in easier going forward. Reason being, the Fed is, I think it was a dovish meeting. Powell was very confident. He was very confident during the meeting. If you watched him, why is he so confident? Well, he probably knew something. He probably knew employment was slowing down, and we have unemployment tick up to 3.9. That's what they kind of want to see to cut rates, or 4%. Payrolls dropped significantly. Big miss on payrolls. Expected 240,000, came out to 175,000. So payrolls missed. Average hourly earnings tick down. The trend is back down in average hourly earnings, which is another wage inflation indicator. So rates are coming down, right? And part of that is commercial real estate. There's almost $1 trillion of commercial real estate that is due. And if it does default, that is going to be deflationary. The Fed will have to cut rates or inject liquidity. So also Powell said, I don't see stagflation. GDP is at 3%. There's no stagflation here. Right? You're at 3% GDP. And I'm looking at this Fed net liquidity. Which one? Where is it? Here we go. Why does this look so weird? Oh, I'm on the 3-month. GDP now. No, I don't want to see that. Let's just go to the dollar here. Yeah, so keep an eye on this. This is the financial cycle here. It's starting to move up. We had a down cycle, now we're moving up. Now liquidity did fall significantly, but it looks like it's going to start picking up again. Right? Whenever things break, liquidity goes higher. So market liquidity, credit, whatever you want to call it, credit supply. With rates coming down, this should move up. With 10-year rates coming down. So yeah, the Fed was dovish. I mean, he said, look, 3% GDP is not stagflation. He still thinks inflation comes down going forward. Oil prices are falling. He did say multiple times commercial real estate, there's some issues. So he's giving a signal that they're going to have to cut rates. Something is weakening. He's not worried about the employment cost index because as long as it's higher than CPI, that they're fine. And they're ending QT. That's the big signal here. They're ending QT June, which is next month. they're ending QT, right? They're ending QT, and that means we're headed to QE. Markets are forward looking. What would you make of oil prices going up a lot this year? If oil goes up a lot this year, that's a good question. I mean, it's just going to tighten the consumer. I don't even think at this point it's a big factor. Unless oil spikes. If you get an oil spike, that's going to be a shock to the system. And I would say Tigger Media, if oil is going to shock, it's going to be here. It's going to be in the summer demand months, right? Once the summer is over with, then that's it. And usually oil peaks out before the summer. So my guess is if we don't get a shock, that's it. I mean, it's coming down. Another war could cause oil to spike, like more escalations of the war. But you have Blinken over there in the Middle East trying to do a deal with Saudi Arabia. Saudi Arabia will increase production, but they want something from the US. And I think that's what we're negotiating. What are we going to give them? Some type of weapons? I don't know what it is, but we're probably going to be arming Saudi Arabia as usual to get them to produce more oil. We're probably offering them some type of cybersecurity protection. Who knows? And with that comes more production from Saudi. And I don't think oil prices really do break out unless there's a shock, like I said. And a shock would just put us in a quick recession, and then the Fed cuts rates. So either way, the path is rate cuts. The question is when. If they're further out, that means you have a strong economy. If they happen sooner than later, something broke. Commercial real estate probably broke. So oil, I'm not even too worried about at these levels. It is easing. It is starting to ease. It could break down further if there's no spike in the summer. So for now, yeah, FOMC is pretty dovish. Things are looking well. Just keep your eye on those rates, 10-year rates. This is kind of what's moving the markets. They're starting to ease. And as long as we get the easing of rates, then, markets move higher, period, because it is not the economy. And the economy is weakening, but we expected this in these next months. We expected a weaker economy. There's no reason to spend. And people are running out of juice. And when they run out too much, expect Joe Biden to step in and print more money, right? And whatever way it is, more checks, more stimmy checks, or they might not be stimmy checks. It could be in some form, some kind of assistance is probably coming. So will that be inflationary? Maybe the Fed doesn't hike rates, but they're looking at September. Now we're looking at September for the first rate cut. It keeps getting pushed out, but that's because the economy keeps strengthening. So, it is what it is. I'm gonna leave it there. Hopefully it brought some value today. And let me see. Profit margins are up. Let me just run through these slides. Short-term stagflation in the supply chains. It's only been 1 month, though. Don't get too worried. It's been 1 month. We'll check next month and see how things pan out. Jobs and employment got weak, right? The jobs market weakened. That got rates lower. That pushes up stocks, right? Lower rates. It went from 4.7 to 4.5. That's like a rate cut right there. That's almost a 25 basis point rate cut. That's one reason markets are up. Profit margins, net profit margins are climbing. That is bullish. Okay. Buybacks, stocks, the biggest stocks in the market are buying back shares. They're creating more scarcity, and now they're paying dividends. That's bullish. Earnings per share is due to go higher for the rest of the year, all the way till 2025. That's bullish. Commercial real estate might break, but as usual, okay, the Fed will step in. 2023 was a bigger crisis as far as market. Well, it wasn't a bigger crisis, but there was more defaults. And the Fed came in with $500 billion of injections. That's what I expect if something breaks in real estate. Okay. Janet Yellen, okay, or the US Treasury is now buying back Treasury. So they're actively doing QE. They're going to actively lower rates. So it just looks like more liquidity. You push it down the road. Check out your comment. Thoughts on Apple? Let me see. Thoughts on Apple? I kind of went over Apple already, Isan. Yeah, I think I went over Apple. I'll tell you what, I don't think Apple outperforms Ethereum or Bitcoin. So we'll see how that plays out. So yeah, that's it. That's the rundown. Hopefully you brought some value. Is stagflation legitimate concern? Not yet. I think we need more months to see if it's legitimate. And if it's not, it just means inflation comes down. inflation's looking to come down, and especially service inflation. So hopefully that is the case and we move higher. Other than that, I'm out of here. Stay blessed this weekend, and keep learning. Be safe, lift weights, eat healthy. Catch you guys next time. Thank you.